All right, let's start it all over. Good morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Thursday. 800-951-0592. AllAmericanGold.com is the website, and it is Thursday. We've got so many things to talk about today. We've got a down Wall Street today, gold and silver rallying today. We have a lot of economic data out today. You're on the clock. I'm just going to say, I know that some of you out there are like, well, you know what, I need to know when it's really time. When do we really have to start getting ready? That happened this week. The yield curve un-inverted this week. So what do we know about inverted yield curves? Here's what we know. The longer they go, the worse the bubble is. So when we talk about all of our boom and bust cycles, we know all the big bust cycles, from the 87 crash, the dot-com crash, the financial crisis, Great Depression, all of them had extremely long inverted yield curves. This one was the longest one ever. So when you look at the top three longest inverted yield curves, financial crisis, that was number 3. And look how bad that was. Great Depression. Now, I wasn't around in the Great Depression, right? And most people weren't. Some of us, like, you know, my grandparents, right? You know, I think I had a couple of conversations with them. They were like teenagers during the Great Depression. And how bad that, you know, the stories are about how bad it was. That was the second longest inverted yield curve until this one, right, which is now just ended. That gives you anywhere from, let's say, you know, mostly 90 days is usually the number they like to give. I'll stretch it out a little bit. In the next 3 to 6 months, we should expect a recession, and based on the duration, the longevity of this inverted yield curve, something very, very significant. So you need to start, if you haven't already, please, I hope you have, but if you haven't already, the time is now. The time is now. You know, yesterday we had Greg Marinario on talking about Bank of America. He believes they're going to be the fall guy. That's why Warren Buffett is getting out of it altogether. And of course, a lot of these rich guys, Warren Buffett being one of them, they're building these cash piles, huge cash piles, right? Because they're getting ready, right, Jason? Because where do they make their money? They make it on the crashes.
So something you don't hear about with the Great Depression is the high percentage of new millionaires that were created during the Great Depression. And look at how many billionaires are popping up out of nowhere the last few years, right, Joe? Ever since the economic crash in 08 and 09, look at all the billionaires popping up. All these billionaire, influencers that are all over the place. Oh, Bezos and Musk and Zuckerberg. And I mean, these guys were billionaires before that, some of them, but more and more and more of these types are popping up, Joe, because they're knowing to position themselves for a wealth-stealing event that's coming, Joe.
Yeah, and we had, like I said, a bunch of economic data that's suggesting that things are changing quickly. When we get back, we'll talk about the Beige Book. What did that look like? We had jobless claims. We had the ADP employment report. Because of the holiday, it was a day later. What was inside of that? And then Challenger Gray and Christmas. What are they saying about the jobs market and how many companies are laying off? We've got that and so much more coming up here. But our toll-free number, 800-951-0592. Jason and I will be back right after the break. We're back here, the Patriot Radio News Hour. Joe and Jason. And, well, let's just say an adventurous Thursday, a quick look at the markets. Listen, the Dow's down 300 points. The S&P's down 20. The NASDAQ is up 30 right now. The 10-year note 375 and falling. Crude oil is up over $1 as the OPEC rate production increases has been taken off the table. So they, go figure. You drive the price down, they'll just say, well, we're not doing it. We got gold up a baker's dozen, 2,510. Silver up almost 75 cents, approaching $29. Getting ahead of myself. $29 on silver. Get diversified. Listen, playing around time's over. We talk about, hey, you get the warning signs, right? We've seen the slowdown. We've seen the consumer stocks getting hampered. Now even like NVIDIA, hey, even a good number isn't good enough anymore. We're starting to see all of these warning signs. The yield curve un-inverting is really the last big sign here. Check out our friends at Y-Refi, up to 10.25% fixed rate of return, not correlated to Wall Street. That's the big thing here. Because what are we getting diversified away from? We're getting diversified away from the debt market. That's why you got to have your gold and silver. Check out Y-Refi because it gets you out of the stock market. You got to have at least $50,000 or more. And again, if we use the previous big inverted yield curves as our measuring stick, right now, 87 crash, I really wasn't around, right? But look at what happened. Japan got crushed, right? Never to be really, their days of being important came to an end at the 87 crash, right? The dot-com crash, right? Everybody thought anything dot-com was going to be the winner. Kind of, it's kind of weird because it kind of feels that way a little bit with the AI stuff too, doesn't it? Then, of course, we had the housing financial situation. That was brutal. Now, that was, let's face it, I was on the air then. That was horrible. You talk about a stock market that lost over 50% of its value. Right? So today, if it does just that, it's 20,000. Remember, Greg was talking yesterday, hey, don't be shocked if it goes below 10. And this is why I'm telling you, you've got to be the most diversified you've ever been. Check out our friends at Y-Refi. If you got 50,000 or more, especially if you're one of those people that got way too much money sitting in your banks. There you go, you're back. You lost it there for a second.
From what I'm looking at, Joe, this may be, in all the years that I've been into gold and silver, I think this is the most important time to be buying gold and silver right now. And it's
absolutely,
there's a race going on here. You may not even know what's going on. Real interest rates, which we don't talk a lot about real interest rates, which is the interest rates versus actual inflation. It's almost for 30 years, it's been negative. Since the 90s, it's basically been negative. It just went positive. World War II, they did capital controls. There's rules that they change and things that they're going to manipulate. Everyone's heard Kamala Harris say, I'm going to 25% tax on unrealized gains. Yeah, that's not the only way they can do it. It doesn't matter who's going to get elected. This thing's moving in a way that they're going to put capital controls in place to take it from you. And you better have things independent of the current system. Keep 1 foot in the current system, but get 1 foot out. And if you don't have your 1 foot out when this thing changes, you're in bad shape. I'm talking you are going to be wiped out. So many people are going to get wiped out by this, Joe. And these capital controls, these rule changes are coming. Get this election out of the way and watch out. Fireworks. Doesn't matter who's elected, Joe. Yeah. Gold and silver, more important, I would say, right now than I've ever seen as a reason to get in or to buy more heavily in, Joe. This is you got to do it.
I was here, and I remember Eric and we were talking about the yield curve un-inverting during the financial crisis, and really, the housing/financial crisis. And I saw firsthand, because at the time, that was the second longest inverted yield curve ever, only to the Great Depression. This one is bigger than all of them. And then you start to think about, listen to what Challenger Gray and Christmas, so I know it's kind of a funny name, Challenger Gray and Christmas. They track layoffs and hiring. That's all they do. This is what they do. Layoffs in August. Okay, so just a few weeks ago, what is it, September 5th, hit the highest total for the month of August in 15 years. You've got to go all the way back to 2009. What was happening in 2009? Oh, yeah, that's right. We were kind of in the throes of the financial crisis. But then it got worse. Year-to-date hiring, the lowest in 19 years. Wait, what was that? 05. Do you remember what was happening in 05? I remember. Remember, people lined up in the desert. There was just a trailer, and people were paying $10, $15, $20, $30,000 for a lot that a house was going to be built on eventually. And then it all came crashing down. And then, of course, the financial crisis followed. But, Jason, this is what Challenger Gray and Chris, they've been doing this forever. And it's crazy how all of a sudden, and remember, this is how it happens. It's gradual, and then all of a sudden, we haven't seen numbers like this from Challenger Gray and Christmas in a long, long time. But they're literally drawing the parallels. Hey, guys, last time we saw this, oh, yeah, that's right. We were in the middle of a housing/financial crisis, and here we are almost overnight where all of this seems to be happening. And Jason, of course, we know it wasn't overnight because we've been getting all of these signs. But there is no doubt when Jay Powell at Jackson Hole said, hey, we're going to change policy, it was obvious that they had been getting a lot of this information as well. But the only thing, I will say this, there was an outlier today. The only real good thing, jobless claims. Yes, the one number that nobody believes anymore, but I'm going to still report it. I think it was 228,000, 227,000 first-time jobless claims, even despite all of that. And Jason, even continuing claims, which have been elevated, they did fall as well. So one government number still trying to say everything is great. All the non-government numbers saying, hey, this is the worst it has been in a long time, especially when it comes to jobs. And I think that's really at the end of the day, isn't that the most important thing? Are people working? Are they not working? Are they able to make enough money to pay their bills? And this is something now where you got to start looking at. Delinquencies have been steadily rising. Are we going to see another major move in delinquency rates? And looking at this data, Jason, it appears like that's probably going to be the case.
Yeah, that's probably going to be the case. And the all-at-once, Joe, I don't know if this will ever be an all-at-once thing. I know there's going to be a quickening of markets falling apart for sure. But this has the feel of something that's just going to keep going. Everyone's got this whole boom and bust cycle thing in their head. Might not be no boom on the other side of this. I mean, the COVID crash is a bad example for people. Yeah, it crashed, but it came right back. Well, I don't know. Are we going to print $150 trillion the next time? And is that even going to work? And hold on to your hats if they decide to do that for inflation.
Yeah.
So, yeah, Joe, this is a long-term situation. And like I said, if capital controls are coming on the other side of this thing here pretty soon, they're going to change the rules, let banks do things that they haven't done for a long time, try to inflate their way out of this thing. the average guy is going to be hemorrhaging. The wealth transfer, like a lot of guys on the internet are talking about, is going to be more extreme than even they're waving the emergency flag, Joe.
You know, the Fed and the FDIC, the comptroller of the currency, they know the plight of these banks. They know it. They wanted the biggest banks to increase their capital reserves by 25%. I mean, that's a big number, 25%. But of course, why 20? It's not like they're saying, well, we want it just because. No, because they know that's what they need. Well, guess what? Apparently, the big bank said there's no way we can do it. They're only going to be able to increase capital reserves by less than 8%, which tells you, Jason, somebody's got to get ready to take the fall. 800-951-0592, Patriot Radio News Hour. Joe and Jason. The losses on Wall Street picking up, down 350 now on the Dow. The S&P's down 35. The NASDAQ has now gone into negative territory, down 50 points. Gold's still up $13 right now. And we got the jobs number tomorrow. I have no idea what it's going to be. The government jobs number, they've been unbelievable. And the revisions have said so. But again, I think people are starting to pay attention to all the non-government things. I think today, news out of Challenger Gray and Christmas about the state of hiring and, of course, the state of layoffs. The largest layoff announcements for the month of August in 15 years. Hiring for the month of August, the worst in 19 years. And it now may be, are we going to enter into this thing on Wall Street where bad news is bad news? Right? Because the whole, hey, soft landing, all of this. Listen, I would love a soft landing. I would. Give me one example where we actually had one. And then maybe I could give some credibility to it. Jason, they've never done it. The central bank has never been able to do it. All as they do, they have one play. And I don't care, they talk about we've got this tool, that tool. No, they've got one tool. Debt creation. That's their only tool. They call it different things, right? Quantitative easing. Emergency lending facilities, reverse repo facilities, this facility, that. We can cut rates, right? We can do it. No, it's all a debt creation bubble, and it's starting to show. And here's the bad part. I hate what Jason said earlier because, we talk about boom and bust. Are we going to be just looking at bust this time?
For a while.
Right?
Yeah,
It'll be a while, and I agree. I don't think they can print the way they need to. If you go back and you look at the financial crisis and how much debt they really... Now, forget about what they told us. How much they actually created back when the deficit was, $6, $7, $8 trillion. What they would have to do this time, Jason, I don't think it's doable. I really don't, especially with what's been going on in the treasury markets and what has been going on now, the yield curve un-inverting here. I think it is a very, very dangerous time, and it's going to be interesting to see, is this just another blip? Do we still have some more time? But I think everybody knows, the traders know too. Once that yield curve uninverted, okay, we're on the clock, right? We've got 90 to 180 days. Fingers crossed, can we even get to the election? And now, again this morning, guess what they're talking about? Should the Fed go bigger rate cuts? Should we go to 50 basis points? What about cutting all the way through the presidential election, something the Fed normally doesn't do? Jason, I think all of those things are on the table.
That's right. And I mentioned real interest rates are positive. Now, if you look at real interest rates, they've been negative essentially since World War II. But there are times in the 80s and things where it went positive, Joe. That's not good for the banks. The banks are in a really, really bad shape. If real interest rates are positive, that means the borrower is in the benefactory situation. The lender, the banks, are in the negative position now. This hasn't happened in a long time. You know, we all know that the inflation seems to be ahead of the interest rates. I mean, look how long it was zero, right, Joe? This is why capital controls are coming, and this digital currency, whenever it comes in, even if it doesn't come in, they're going to be watching. These 87,000 IRS agents, they're all going to be watching everything you do with your money at all places. And, Joe, it's very possible that the big banks are going to be allowed to sell as many treasuries to the government to keep the government spending and release those. Because right now, the big banks can't do that. Essentially giving the big banks the same power the Fed has to just crank out money. And that might be, I said, Joe, a lot of printing, right? And interest rates higher. It may be happening on the bank level. And that way, when things really blow up, it's the big bank's fault. It's not the Fed. They printed up too many. They loaned too much money to the government. It's J.P. Morgan's fault, or it's Bank of America's fault, or whatever, right, Joe? We're heading for some. And I'm telling you, anything that you hold, any paper assets, things that have a record, these capital controls are going to just rip you up. It's gonna be. I think we're headed into stuff that most people don't even think it's possible. But all you have to do is just change the rules. It's just money. Money's an idea. You can just change the rules, right, Joe?
Yeah, and that's exactly what we've seen them do over and over and over again, all with the illusion that they're helping you. But that isn't going to be the case here at all. Today, it is what it is. Today's special, you know what? I like it because it's $1,360, so we're the mothership up in Johnstown, 1360 KHNC, of course, 1010 here in Phoenix, but $10 liberties, $1,360 with a jobs number tomorrow that I don't know what's going to happen, right? They've come up with some pretty crazy numbers in the past, but if this one is like what we saw from ADP, what Challenger Gray and Christmas are, I think you could see a very big move, not only in Wall Street and not in a good way, because of the fact that we've been saying soft landing, maybe not so soft anymore. And then talks that the Fed is going to have to be more aggressive. Remember, I've still said there's only going to be 2 rate cuts this year, September and December. If this number is what I think it's going to be, that will change. We'll have more rate cuts this year, which is going to lead to much higher gold prices. I don't see really, I thought if there's going to be a chance for gold to sell off, it was between Jackson Hole and tomorrow, and it just doesn't, you know what? It tested that 2470, that new higher low, like 3 different times, but has always rallied back. And now a bunch of charts say if gold's going to break out, it could be another $100+ breakout, which wouldn't surprise me at all. So take advantage while you can. Believe me, this is inexpensive compared to what it's going to be. 800-951-0592. Right now gold's up $15, $2,512. Silver's up 63 cents. The Dow right now closing in on 400 points down. Patriot Radio News Hour will be back after the break. 800-951-0592. Joe and Jason here on this Thursday. $10 liberties. These are the old private gold, 1866 to 1907. $1,360 today at 800 951-0592. For those of you, because a lot of people, I get it, right? Hey, well, gosh, most of my wealth, it's in an IRA. Maybe you had, we can't do anything with a current 401k, but if you had an old 401k, or maybe you're retiring, you want to roll part of it or all of it into a hard assets or a precious metals IRA, we can help you do that. You can just call Arlene, is our IRA expert. She handles all of it. She can help you through the process and really make it as simple as possible. Obviously, it's paperwork that has to be done there. Don't forget our metals plan. Right, for as little as $100 a month, you pick the day of the month, the amount that you want. We hit your card, and then 4 times a year you get 4 physical deliveries a year. Brittany's already shipping. We no longer. We used to wait till the end of the quarter and ship. We can't do it anymore. Back when we don't use the post office anymore. We use FedEx. But back when we were using the post office, they literally told us, you can only bring 10 boxes a day. You can't show up here with 30, 40, 50. And we're like, what? Yeah. So we now, we basically deliver the entire month of September every quarter. So those are already starting to roll out. So, Jason, there's no reason you can't get diversified here. $100 a month. Right, on the metals plan, there is no max. You can do as much as you want on that plan. You got an IRA, an old 401k. You can roll all of it, part of it, into a precious metals IRA. If you got too much money sitting in your bank account right now, by the way, bank stocks are all down today. Morgan, B of A, Wells, Citi, you name it, they're down today. And, of course,
yeah.
Jason talking about real interest rates, not a great thing for them. Or buy the $10 Liberties, $1,360. I mean, here's the sad part: $20 gold's $27.40 now. Remember yesterday, gosh, we were running them on sale. We did everything we could to try to entice you, but now here's the problem, Jason. Premiums are starting to go up. We told you this happens in September, and now there's real concern now that things are going to take, if nothing else, another leg down, right? So we whether or not is this the start of it? Like I said, you're on the clock here. Anywhere between the next 90, 180 days. And by the way, here's the one thing about the inverted yield curve thing. You know how many times it didn't happen? No times. It's always happened. So let's see. Soft landing by the Fed. They've never pulled that off. Inverted yield curve, and especially once you get to any length of time, right? Now, if yield curve inverts for a day or two, a month, that doesn't mean a whole lot. But once you start stringing together 6, 7, 8 months, now 2 years of inverted yield curve, every single time, this is what's happened. Now, can they avoid it? I don't know. I guess if they came out with the money bazooka, maybe, right, Jason? If the Fed announced, hey, by the way, quantitative easing's back, we're going to have a $20 trillion balance sheet, and inflation goes to, I don't know, back to 8, 9, 10%, I guess maybe they could. Highly unlikely. I hope you take it seriously and start getting ready. If you've never done business with us before, it's so easy. It's so easy. I've got the greatest staff ever. Call the 800 number. Just tell the girls, hey, I want the special. I want what Joe's talking about. How do I do it? If you want to ask questions, they'll walk you through the process. If you want to come in, right? Jason will see you up there in Colorado in our office there. You can come to the office here in Phoenix. If you're close by, we can show you the product. We can walk you through everything. It's a very, very simple process. And here's the thing. Listen, we're going to make a little bit of money. I'm just telling you that right up front. But here's the thing. A little bit. Right? That's the thing. Remember last week we were telling you about what these companies will do. People are trying to do $100,000 and get $50,000, $60,000 worth of stuff. Don't let that be you. Call us here at Patriot. We're going to take great care of you. 800-951-0592. And Jason, I guess we're going to sit here and watch what happens. It's going to be very interesting to see how the banks react as the real interest rates keep going in that positive direction.
It'll stop because they're going to lower these rates, and they're going to lower these rates, I think, several times into next year now. And then I think maybe by next Christmas, not this one coming up, the one after, is starter home's going to be $700,000? Is that what we're looking at in 1 year's time, Joe? Is they going to let inflation just run hot because of what they're going to try to move this country in this economic direction where they don't have any good decisions, to fix the damage that's been done. World War II, the debt to GDP was 125%, and that's right where we're at. And they deleveraged everything, and then they were successful in deleveraging. But Joe, it's we got a massive debt now. Yeah. The inflation that can happen. We're not going to have 1940s deleveraging and then wait 30 years for massive inflation. We're going to have deleveraging with immediate inflation, stagflation from here for the next couple of decades, Joe.
Boy, I want that to not be true, but it sure looks like they're going to make money printing easier by lowering rates. And by all accounts now, rates are going to be much lower than even I thought. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour on this Thursday. Right now, the Dow looking down here, almost 400 points now, as just like we thought. People are starting to read some of these comments. The soft landing, which was, hey, maybe growth slows, but everyone's happy. The employment thing not priced into stocks here. So this will be a major change, right? This will be because they understand. Right? If the jobs market, if this really is happening, and the layoffs are here, as Challenger Gray and Christmas has said that the hiring has stopped, then all of a sudden we got a big problem, right? The banks are already, there's not a lot of room here. Any shock, could you imagine if we have another shock like we did in 2023? And remember what happened in 2023. I mean, gold premiums went through the roof, right? Everybody was panicking, pulling money out of their banks. If this happens again, because of the fact, let's face it, not only do we have a real estate problem, but you throw this on top of, okay, people working less, getting laid off. That means they're not going to pay their credit cards. They're not paying their auto loans. They're not paying their mortgages. And we've been seeing these rise consistently all year back to what we would say are normal levels. Are we getting ready for unnormal levels? And I think this is kind of what Wall Street is worried about here today. $10 liberties, 1,360 at 800-951-0592. And Jason, I think we're going to see what tomorrow's jobs number is. I know that people are having less and less faith in what the government is saying these numbers are. And I think today, really, it was ADP along with the data from Challenger Gray and Christmas. I think that was the most disturbing that we saw today, because they essentially said, listen, hiring hasn't been this bad since 2005. Of course, remember 2005, that's when the housing market stopped. And then, of course, they said layoffs are at the same levels now for the month of August, the highest levels going all the way back to 2009 when we were in the throes of the financial crisis.
I think the labor numbers have been misleading for a while, especially since COVID, Joe. There's just not a lot of people working the 9 to 5 Monday through Friday with a pension and retirement, right? That just doesn't exist. And so the guy with 3 part-time jobs loses a job. It counts as a job loss, but he's not unemployed. Right. And just, I think there's so much of that going around that it's hard to understand the job market. So you have to look. I always just look around, and I'm seeing stuff, Joe, that's just really, really bad. There's a lot going bad.
Yeah, I talked to several of my friends last week, and they went from, man, I'm so busy, to it's all stopped. I got a buddy of mine. He has had this catering business for decades, and he is telling me, he goes, it was a monthly thing, every single month for years and years. Even he goes, obviously not during COVID, but anything outside of that have always been reliable. He said they're calling me up and saying, hey, we can't do it this month. We'll let you know. We'll get back to you. These are things are changing. There may be this groundswell here. We'll see how it plays out. Just a great opportunity on $10 Liberties today. 800-951-0592. Jason and I are coming right back with the half-empty cup.